no matter what the market does, no matter if it skyrockets or drops, you're just going to stick to that plan. You're not going to put it in the G fund and wait for things to get better, because that always, I shouldn't say always, but more often than not, you're going to screw that up. If you keep playing that game, you're going to end up in trouble.
Welcome to the Military Money Manual Podcast. Hello, and welcome to another episode of the Military Money Manual Podcast. We're excited today to have a very special guest with us, not just my co-host, Jamie. Hello, Jamie.
Hey.
Although he is special too. Today, we have Rich from richonmoney.com. Rich is going to help us learn all about the VA loan, managing rental properties while on active duty, and when real estate investing might be a good option for you. Rich is a retired Air Force OSI agent. That's Office of Special Investigations, kind of like NCIS. And I'm sure it's just as exciting as the TV show. He has a growing YouTube channel on TSP investing, VA loans, and other money topics. Rich, welcome to the podcast.
Spencer and Jamie, thanks for having me on today. I'm excited. I love talking to military audiences.
Well, Rich, we're very excited to have you in the podcast because if there's one weak area for us on the podcast, it's real estate investing, and specifically investing while you're moving, often in the military, the VA loan, those very niche military aspects of real estate investing. So we want to get into that. But before we do, what do you tell people you do now? I know that you recently retired, and I know you as a real estate investor and educator on YouTube, but how do you describe yourself? What's your military background and your real estate experience?
Okay. So those are big questions. So right now, I retired in August of 2020, 20 years of active duty as an OSI agent. I spent most of my career overseas, Japan, Germany, Korea, and Guam. Actually, I'm also a Chinese and Japanese linguist, so I was able to use those languages while I was at work.
Wow.
I got into real estate investing in 2003, bought my first townhouse, and always was in love with real estate since I was a child. That turned into me to, I it looked like I was going to make a lot of money on that first property. So I tried to keep buying, but it didn't work out because it was when the market was crashing in like 2006, 2007. I flipped houses for a while overseas. I got to Montgomery, Alabama in 2013. Figured out that real estate's going to be a good deal here. About 6 houses while I was stationed here 10 months. Moved away to Germany and bought 14 more from overseas. Had a property manager for those. When I retired, I came back to Montgomery, Alabama, and now I self-manage my properties. Currently don't really have a job. I'm going to continue investing in real estate. I'm going to play around with my YouTube channel, which I enjoy a lot, and figure out what's next for me.
That's awesome. Well, like Spencer said, Rich, thanks again for joining us today. And for our listeners, we're glad that you're here with us as well, as always. If you're enjoying our podcast, just a quick reminder to leave us a 5-star review on either Apple Podcasts or Spotify. We'd greatly appreciate any reviews or any feedback you may have and subscribing to the podcast. If you do have any questions or feedback, you can message us on Instagram at Military Money Manual, or you can email info@militarymoneymanual.com. So, Rich, you kind of gave us an overview there. You have 30 properties while on active duty. How on earth did you do that?
Again, that's another big question. But to summarize it, I guess to be clear, while I was on active duty, I had 20 single family homes. That's what I got up to. But what's interesting about them is they were all paid off. So that's kind of the unusual part.
Yeah.
But it's not like you don't make enough money in the military to buy 20 single family homes for cash. Probably to summarize it, I saved and invested well. I was frugal. Me and my wife did a good job with money. Come to the 13-year point of my career, we had a paid off townhouse. It was also a rental, and we had a good amount of money in investments, and we'd flipped some houses. We had the cash to start buying properties, and not just to finance it, but to just pay cash for them because they were so cheap here in Montgomery, Alabama. And they cash flowed really well. And it kind of led to sort of like a cash flow snowball where, six cash flowing properties can buy the seventh, and certainly 19th cash flowing properties buys the 20th pretty quickly.
Yeah.
Right.
So that's kind of what happened. The extra 10 properties, or actually 10 doors, were COVID purchases. A sixplex and a fourplex, both are financed, which for me was actually my first time using financing. But both of those are financed. So one is a commercial loan.
Rich, is this a wealth building strategy that you would recommend for all military members? I mean, it sounds like you kind of had your financial system in place, and it was when you had large cash savings. I mean, how much can we talk about actual dollar amounts? I mean, were you buying these properties for like $100,000 in cash, or
So the first property was 30,000, and the second property was 45,000, and then they kind of just kept creeping up in price as people figured out that prices were too low here. The most I ever paid for a property here was 65,000. So those are the numbers that we're at. And now they're probably worth. I mean, they're worth between 80 and 120 now. So that there's a good amount of appreciation there. I would say that doesn't really compare to appreciation in like really hot markets, but there's been some. So that's kind of how that worked.
And when you're looking for these properties, I know you talk about on your YouTube channel, the 1% rule and the 50% rule. Can you kind of break those down? And is that how you were initially approaching searching for the properties?
Yeah. Well, I guess I want to back up because I remember you asked a question. I didn't answer it yet. And it was like, would you recommend this strategy to everybody? And I think what I'd say to that is the strategy that I recommend is the strategy that put me in the position that I could buy those properties. And that was like, it's kind of typical stuff like maxing TSP, maxing IRA, living frugally, investing in index funds. Don't get pulled into the hype, right? Like don't do crypto. I mean, you can dabble in crypto, but like don't make crypto a big deal for you. Don't get into these like hot stocks that are skyrocketing and get excited when, GameStop, quadruples in a day. That's kind of the basic stuff that I think everybody should do. And I don't have like bad debt, good debt with real estate's okay. If on top of all of that, you have this interest and desire to also add real estate to that, then I would say do it. The other thing that I'd say is I did them in cash, and there's like varying reasons for that. I used to think that was a superior strategy, but looking back and having just lived through it, I don't think that was necessarily superior. If you have 20% down on rental properties and make sure that rental property is cash flowing and make sure that you have enough reserves to handle yourself, then I would recommend like buying a second property with 20 or 25% down. There's no like massive advantage to buying in cash. And in fact, it's kind of a proven fact that over the long term, you'd be better off buying with debt. It's just that if you have 30 properties that are leveraged to the hilt and then you hit like a downturn in the market and something weird happens like 2008, that's kind of scary. So that's like my really long answer to your question.
That actually leads perfectly to my next question. I was going to ask about the stress aspect of it because military life is stressful, unknown deployments, TDYs, having long distance landlording. For a lot of it, you talk on your YouTube channel about finding the right property manager and stuff like that. But what's the stress like when you've paid for cash for these versus if you have a mortgage? And was 2008 less stressful for you because you had cash properties versus having to worry about the mortgage?
So in 2008, I hadn't bought any of the properties here in Montgomery, Alabama yet. So I had been flipping properties kind of through the time that things were crashing. I had that one rental in DC. 2008 didn't affect that rental in DC very much. It was like a townhouse, like government, government just keeps plugging on, and the market there didn't freak out or crash or anything. Certainly the rental market didn't. It's possible that prices of houses, they did dip a lot, but rentals didn't dip at all. So I didn't really feel that to any degree. Of course, we could jump forward to COVID. Like, how did things go for me during COVID and having paid off properties versus leveraged? COVID was super scary when it first happened, but all my properties were paid off. So I had like zero stress. I was just annoyed that tenants might stop paying. I actually felt comfortable enough to buy properties at the beginning of COVID when people were freaking out. But to answer that question, it doesn't necessarily make financial sense to pay cash for properties. You're probably better off leveraging them responsibly. But if you have them paid off, and certainly as you near retirement or as you want to like stop working a normal job, having them paid off is amazing peace of mind. And it's just way, way, way less stressful. And the cash flow looks a lot better. I mean, instead of cash flowing 150 or 200 a month on each property, you might be cash flowing 600 or 700 a month on each property.
Mm-hmm.
So, and that's on, something that rents for 800 or 900.
Yeah.
So, the peace of mind is pretty amazing. Sometimes it's more important than what makes sense financially. It's a personal decision.
Yep.
Yeah, absolutely. I mean, we talk about that a lot on the show, that so much of finances is, mental game. And if what you're doing doesn't let you sleep well at night, then it's probably not worth doing it, even if you are going to get a better return on your investment. Mm-hmm. One thing, Rich, you mentioned buying properties during COVID. It reminded me of the Warren Buffett quote about, being greedy when others are fearful and fearful when others are greedy.
Yeah.
Did you kind of, did you notice that, man, like these properties that were selling for, 100,000 a couple of months ago are now selling for 80,000 and think this is a good opportunity here because I know I can rent these out? Did you have a pulse on the market to kind of understand that there was an opportunity here?
I think that's what my strategy was. My strategy was, man, I'm going to be buying during this entire crash. Right. And I could like grab a bunch of stuff for great prices. The two properties that I bought, they weren't like home run. Well, one of them I think was kind of a home run, but like a sixplex that I bought wasn't necessarily a home run. And it was like it went under contract before we knew we were going to lock down. But once we were on, like by the time it closed, we were in masks, and it was like I was sitting there in the room, signing the documents, and I was the only person in the room, and like everybody was like standing on the edges, and it was like really. I mean, that probably seems normal now, but that was like really bizarre.
Yeah.
And I remember the sellers thinking, like, I could just tell they're just like, oh my God, I hope this guy like doesn't back out. I hope he buys it because the market's going to crash and we're going to get stuck with this place. That was my strategy, but I would argue that it just didn't happen. Like, just like there's a lot of people that sold their TSP right into the G fund when COVID started, and they got totally screwed because the market ended up taking off after that. The real estate never really had a blip. It didn't really ever have a blip. And so I was going to take advantage of that, but it never happened. But at the same time, I also didn't overpay. I mean, I got the properties for a good price.
So Rich, you mentioned, not changing your asset allocation during COVID. And I know a lot of people, who try to take advantage of the market dip. I mean, you only get 2 interfund transfers every month in the TSP. So if you went to the G fund, it was only a 30-day crash basically from, the end of February to I think like March 20th.
Right.
So there really wasn't an opportunity there to make any moves. So did you change anything about your asset allocation, or did you move more money into the market? Did you have any cash on the sidelines that you deployed, or were you just kind of sat it out and benefited from the 20 and 30% rallies that we had for the next 2 years?
Yeah. Let's see. I was still active duty at the time. And so, August 2020, right? Was when I retired. I did something kind of unique because I wanted to make sure that I contributed to the max to my TSP for my last year in the military, but my last month was going to be July. So I actually contributed like 60% each month starting in January just to make sure I hit that. And I can't remember when I hit it, but I probably ended up buying quite a bit more than usual during the dip.
Right.
So that helped, but that wasn't like a strategy. I think if anything, the lesson for anyone out there, the easy lesson on this, it's easy to say and it's hard to do. Have like a pretty simple plan for your TSP. You're going to max it out every year. You're going to buy a certain amount every month. And no matter what the market does, no matter if it skyrockets or drops, you're just going to stick to that plan. You're not going to put it in the G fund and wait for things to get better because that always ends, I shouldn't say always, but more often than not, you're going to screw that up. If you keep playing that game, you're going to end up in trouble. I get emails from people all the time, and I got one yesterday from somebody in their 60s, who's investing in the TSP, and they said that they had followed some guru that told them to put it all in the G fund around the time that Trump was elected, and then the same guru told them the same thing during the crash, and they'd lost out on, I don't know, 50, 60, 70% of growth
Wow.
because they were on the wrong side of these rallies. You just don't want to play that game. So that'd be my advice.
Yeah. Stay the course. So let's pivot now a little bit. We've talked about real estate investing and your strategy there, and talk specifically about the VA loan. So, I mean, some of the initial questions right off the bat are, maybe you can just talk about in general, what is the VA loan and what's the maximum you can borrow with it? And if there's any, any special considerations you should have before you start using it.
Right. Well, I think there's two parts to that, right? There's using a VA loan just to buy a primary residence. And then there's this idea that you could also use it to invest, which is something that obviously I talk about as a real estate investor. And the main thing I'll say about the VA loan is a program where people that have access to it, like, people that served in the military for enough time, they have access to it. It's basically a program where the VA guarantees 25% of the loan so that we don't have to make down payments. So that's like a really cool benefit. But what you have to understand is that doesn't mean that if you have crappy credit and you've done horrible things with money in the past, you're going to get that loan. You still have to qualify for a loan kind of like normally, although I think you can have maybe a worse credit score, but it can't be like bad. But if you qualify for a loan, there's actually no limit to how much you can borrow with a VA loan. As long as your income qualifies for that amount, the VA is going to guarantee 25% of it, which allows lenders to give those loans without you needing a down payment. Now, what a lot of people don't understand is that does not mean that you don't pay any money when you close. Like if you buy a VA, if you buy a loan if you buy a house with a VA loan these days, and you're probably not able to negotiate where the seller is going to pay a large amount of your closing costs.
Mm-hmm.
So you're going to have to come up with the closing costs, several $1,000s. You probably could budget for 2 or 3% of the purchase price for that. So a lot of people end up like really upset. There's a lot of VA forms and people end up really upset. Like, I thought this was no money out of my pocket. Well, it's possible that if a seller contributes to closing, you could have no money out of pocket. I actually have come home with money in my pocket after buying with a VA loan before. But these days that's hard, and you still got to pay closing costs. But that's kind of what the VA loan is it's a way for military members to buy a house, no money down. But that can be a double-edged sword.
Well, so I guess one of the confusions that a lot of people have is you can't specifically or initially invest with the VA loan. Is that correct? You have to use the VA loan for your primary residence initially?
That's true. But I think that that doesn't really stop you from investing with VA loans in the military because we move so often. As long as if you buy a house and you're like, I'm going to live in this house while I'm here, and then when I move away, it's going to be a rental property, that is totally allowed. Like I was here in Montgomery, Alabama for 10 months and then I moved away.
Yeah.
Nothing would have stopped me from buying with a VA loan during that time and changing that to a rental property when I move away. So it's totally allowed, but you have to live in it initially, but there isn't really a set amount of time for that. Live in it initially, and whenever the military moves you away, it is totally fine to move to your new location buy another house with a VA loan if you still have enough entitlement, and make the house at your last location a full rental. And then the other thing that I'll say, can you buy investment property with a VA loan? You can buy a 2, 3, or 4-plex with a VA loan, and then you just have to live in one unit. So you could invest with it right away because you would have 3 other people, right, living in the 3 other units right away while you're actually serving there. So that is another way to invest with VA loans. Now, the caveat that I'll put on top of all of this, of course, you can do this no money down. Should you is a different question. I've always liked having 20%, 25% equity in a property when I buy it, because if there was a large dip in the market, if something weird happened and rents went way down, or you couldn't rent it out for a long time, or you had a accident and you couldn't work anymore, like lots of things can happen in life. Having equity in the property means that there's a better chance you won't get foreclosed on. But if you have it 100% financed, payments are a little bit higher. And when you go to sell, you might realize that you can't sell without having to provide money at closing. So I'm always of the mind, like you can buy a house no money down, but should you is kind of a personal decision. So that's just the caveat I would put to it.
Yeah, that's a really good point. Now, are there any other downsides of the VA loan? Like I've heard like Dave Ramsey say their fees are higher and you shouldn't use it and you should put 20% down every time. Is it true the fees are higher, or is there some things any gotchas with the loan?
Yeah, I mean, if you are a Dave Ramsey fan, then I would say he's right, because Dave Ramsey's like real careful about doing things on credit. So there is like kind of a high fee. I think it's 2 point something percent funding fee gets added to the loan. And that's like supposedly to, pay for the program or pay for the ability to do it no money down. But that can get rolled into the loan. And if you roll that into the loan, and my loan's at 2.75%, if you roll that into the loan, like it just ain't a big deal. Like that's a couple bucks a month, right, for the next 30 years. So I don't think it's too big of a deal. I think as long as you're responsible with money, I think it's smart to use the VA loan when you can. It's just that if you're kind of like in a financial mess and not even sure you're gonna be in the military that long, and then like buy a really expensive property, no money down, and roll the funding fee into your loan, you might be in a world of hurt. So it depends is the long answer. Yeah.
Yep, it often does. So right now,
Always does.
right now we're in a bit of a hot seller's market, if you will. There's lots, and we're recording this in February 2022. So who knows what the future holds? But right now it's tough out there if you're trying to buy a property. And one thing I've seen online on some of the forums is people just can't buy a property using a VA loan because of the inspection process. So any comments on that? Is it true that no one wants to wait for it, or is it? What would you say about that?
So I by no means endorse this, but I know there's something called Vetted VA. It seems like it's a pretty big, I don't say good, like a pretty big online forum, but they kind of like, it's a place where you can ask questions about VA loans and stuff, but at the same time, they're trying to like funnel you to their lenders and stuff. But Vetted VA, I see it all the time, just watching their Facebook forums. People are going insane. And this has been going on for like a year, maybe longer, year and a half. People can't get their offers accepted. And it's kind of like, I'm retiring and I want to buy my dream home. And like, I lost out on the last 10 deals. And people are freaking out. And they're all offering 20, 30, 40,000 over. And they're saying that they'll waive the right to be able to inspect the property. And I have like advice for that, but nobody wants to hear my advice. My advice is, man, like don't overpay for your forever home. Don't overpay for these homes in this panic that you just have to buy something. This is a great time to just rent instead of buy and like wait this storm out. And I mean, there are people like they've been planning this their whole life. You're going to do your 20 years. You're going to buy your forever home. You deserve it. You earned it. And now it's like, crap, This is really hard, but I'm going to do it no matter what. And I think a lot of them are making very big financial mistakes. Now, a good friend of all of ours, Doug Norman, he has some articles on his blog that I'd recommend everybody read. And I think essentially you type in something like, should I buy a house on active duty? His blog will show up. And also, should I buy one at retirement? And he pretty much says you shouldn't buy a house while you're on active duty. And you shouldn't buy one right when you retire, because most people end up changing their minds about their forever homes. Most people do that. You buy a forever home, you spend a fortune, you get it built, and a number of things can happen. One of them is you can get a divorce. Now, nobody wants to admit that might happen. You end up getting a divorce, right? You end up getting offered a job across the country that makes double. You end up just not liking that city and wanting to move closer to your kids. Maybe you want to move away from your kids. I don't know. But a number of things happen where people regret their decision to spend a fortune on a forever home. So anyway, that's something to consider. The inspection process. It's true. So people in the VA loan forms are complaining because they feel like that their offers are considered on a lower scale than people who are going to pay cash and people who are putting 20% down and have conventional loans that aren't VA. And they are absolutely right. People that sell VA loans will try to argue this point, but they're absolutely right. People that are paying cash are going to win out. And people that are putting 20% down and using a normal bank and normal financing are going to win out. Because the VA loan process can be cumbersome, there is a VA inspection that is done for safety reasons that can sometimes be problematic, that doesn't happen when you buy in cash or when you buy through a bank. So it's just something to consider. You're lower on the scale of people they want to accept. So you've got to bring something else to the table, like overpaying, which I don't recommend.
Now, a lot of people, when they talk about real estate investing, go more short-term vacation rentals like Airbnb and options like that. Did you ever consider that? Or if not, why did you steer away from that kind of model of real estate investing?
So I think if you've been to my YouTube channel, you'll know that I talk about doing self-management, and I talk about automating a lot of stuff and doing it remotely and doing it all online and making it simple. So I manage 30 properties, but I just don't think it's that much work. It just isn't that hard. Lots of stuff's automated. You can't do that with Airbnb. Airbnb is a different beast altogether. Airbnb is not traditional property management. It's not traditional real estate investing. Airbnb is hospitality. So hospitality is a completely different animal. You're talking about interfacing with people every day, and how come my Wi-Fi doesn't work? How come it's too hot? It's too hot in here. It's too cold in here. Where's
the spatula?
Where's the wine opener? There's no wine opener. I'm going to give you zero stars. So that kind of thing can be hard. And while you could make more returns, you will make more returns doing Airbnb. You will earn them. You'll earn them if you're going to self-manage. And if you're going to pay someone to manage for you, you're going to pay at least 25% of rents for that management. So I haven't messed with it. It's not something I like the traditional long-term rentals, and I've stayed away from Airbnb. I'm tempted to try, but I know that it's going to be a lot of work.
Rich, circling back to the VA loan, you'll hear things online about certificate of eligibility. Where do you get one of those, and how do you get one of those?
I've looked at mine recently. So if you go on va.gov and you log in, there's a way to get to a place where you just request your certificate of eligibility. And the certificate of eligibility is a form that tells you, and more importantly, tells the lenders that you can borrow money. You can use the VA loan, and it lets you know how much money you can do that, no money down, how much you can borrow, no money down. If your certificate of eligibility states that you have a full entitlement, which I think it'll say you have 36,000, I think is the magic number, but whatever's a full entitlement where you've never used it before or it's been restored, then you don't have a limit on how much you can borrow. And your certificate of eligibility proves that. Now, if you've used a certain amount of money, then you can get the help of a lender or get the help from like a YouTube video or a website, do some creative math and figure out how much money you can still borrow. Like it's quite possible, because loan limits went way up last year, that if you thought you didn't have any more borrowing power, you may have borrowing power now, even though you've already used your VA loan. And there's like some tricky ways to figure that out, but you might be able to borrow more money without putting a down payment, or you might be able to borrow more money and have a certain amount of it be covered by the VA, and you have to come up with another amount. So those are kind of the options.
Okay, Rich, what about the VA loan as far as new construction? Are there any caveats or limitations for a new build house?
I think that the caveat and the limitation is that it has to include the land. I believe that's the rule. I believe the rule is it has to be new construction and the land. So you can't like have your own piece of land and then like, I'm going to use a VA loan just to finance the construction. Like for some reason, that's not allowed.
Gotcha.
Rich, what about purchasing a property with a conventional loan or a cash offer and then refining into the VA loan? Is that possible?
I believe that is possible. Yeah. There's two different kinds of, refinances that you can do. And one of the refinances is specifically that the VA does is specifically to get you out of your conventional loan and turn it into a VA loan. I don't think you'd do that. I don't think there's a good reason to do that right off the bat. But if you kind of like realize, oh, I have this VA loan entitlement, you could refinance and sort of like get your down payment back. And then now you have a property that's using your VA loan.
And when you're looking at investments to buy or properties to buy, can you give us a little bit of an overview of how you determine if something is going to be a good investment? Cash flow? Is it as simple as, here's what I think I can get for rent minus my mortgage payment and insurance each month, or how much?
Yeah.
What other factors are you looking at there?
Well, that's where I want to talk about like the 1% rule and 50% rule, which is just it helps people that haven't heard of those rules before kind of visualize what getting a rental property might look like. So the 1% rule means if you're going to buy a rental property, I'd say buy it and get it rent ready for $100,000. It needs to rent for at least 1% of that per month to make sense as a rental property, to have the possibility of being a decent rental property. So $100,000 needs to rent for $1,000 a month to have a chance at being a good rental property. Then there's something called the 50% rule. And the 50% rule is a way to help you estimate the expenses that you might incur while having a rental property. And most people drastically underestimate what their expenses are going to be and drastically misunderstand, especially people in the military, because they often buy expensive homes and then move away and then rent them out. So the 50% rule is if you're getting $1,000 a month, which is in our example of a $100,000 home, you're getting $1,000 a month, you can expect that you may spend about 50% of that $1,000 on expenses. And that probably surprises people because that does not include the mortgage. You've got to still subtract the mortgage after your expenses. Now that 50% estimate does include 10% of it being for a property manager. So you could decide to manage it yourself and maybe your expenses would be like 40%. And it is somewhat on the high side. You might be able to do less than that, but not a lot less. These people that are assuming 10 or 20% expenses, or just not even talking about expenses when they sort of calculate what they're cash flowing, are lying to themselves. And I'll give you an example that happens a lot in the military. This happens a lot. I'll meet somebody that said that they bought a house while they were in San Diego, and they moved to their next duty station, and they made their San Diego rental or the San Diego house a rental, and they're cash flowing $200 a month. I'll ask them, what do you mean by that? And they'll say, oh, well, the mortgage is only $2,000 a month, but I'm getting $2,200 in rent. So I'm cash flowing $200 a month. Well, that isn't true at all because you haven't applied the 50% rule to that formula yet.
Right.
And if you do, you're negative cash flowing, I don't know, $800, $1,000 a month. So in the military, people tend to not think about will this house make a good rental when I move away when they buy? And that's just something that you probably need to do.
Right. Great point. And when you're looking at those properties for potential investments, are you concerned more over how much it might appreciate in value and the market of that city, or are you looking for cash flow each month?
Well, of course, like, I think, Spencer, I don't know, did you mention something about making a lot of money with one of your properties just because of timing, right?
That's right. Yeah, I got lucky.
I think that that's a healthy attitude to say that you got lucky. What some people do is once they make that much money, they realize that they're geniuses at picking the right locations to buy houses. And then they start buying everywhere else they go, thinking that they're going to get the same appreciation every time they move. And that does not happen. So I never bank on appreciation in any way. I only worry about how much is this house going to cash flow when I move away. And that's money that if you know what you're doing, that's money that you're probably going to be right about. Like, you're going to know. I know before I buy a property, I already know how much money I'm going to make in cash flow for the next couple of years. I don't know how much it's going to appreciate. And I don't try to guess either. I mean, I think sometimes I'll model that it's going to appreciate 3% a year. But that's only going to keep up with inflation. So I don't worry about cash flow. And I certainly don't chase cash flow. And I also would, to bring up another point, if you're in the military, you want like Rich Carey's advice on real estate investing, don't buy a house in a high cost of living area. Don't buy a house in California, Hawaii, or DC. Because when you move away and you got to turn it to a rental, it's not going to cash flow very well. Now, everybody's going to have examples because of this awesome market we've had since like 2013. But I bought at this place and I made a fortune. But like, that story is going to change soon. And that story doesn't mean that the next 3 years look like the last 6 years. So that'll be my advice to everybody.
As you start to compile multiple properties, you said 30 total doors now, I think 20 while you're on active duty. What kind of protections do you have? Multiple LLCs, or how did you manage that side of the business?
Man, I love that question.
Thank you.
Because it's the LLC dilemma. If you go on YouTube or you go on the internet and you Google, like, should I get an LLC? Should I get an LLC for my real estate? Well, first of all, if you ask a lawyer if you need an LLC, it's kind of like asking a barber if you need a haircut. Right? Or like a divorce attorney if you should get divorced. But I have 2 LLCs and I have my property split up between 2 different LLCs. And I did it because everybody else was doing it, and it kind of made me feel cool to have an LLC. And I kind of felt like, like I'm somewhat anonymous. Like, people can't look me up as easy. None of those things are true. Like, I'm not cool. I'm not anonymous. Like, and it actually hasn't been that helpful. It's more difficult to do certain things, like difficult to refinance, like difficult to like get loans. It might be more expensive to like get insurance. There's like all these kind of downsides. And then this idea that it protects you. Like, if you get an LLC for every property, then that means that you protect. If somebody sues you, then all the rest of your properties are protected. I think that's sort of a fallacy. Certainly if you were negligent in some way, a judge is just going to be like, okay, well, if you're negligent, then forget the LLC. You're liable for this. We're going to get this money from you one way or another. I think that the benefits of an LLC are oversold. You can get one if you want to do it right and like not like have it protect you in a case of a frivolous lawsuit. You have to do a lot of things correct. Like, you have to have, like, I don't know, meeting minutes for your LLC like once a year. You have to make sure that the accounting is all done correctly and that funds aren't commingled and that you don't like accidentally pay for your vacation with, your business credit card. Like, there's lots of this different things that you could screw up where somebody could argue that this is a BS LLC and this person's actually just, running it as a personal business. So that's like the really long answer. That's me giving my long answer. My short answer is, if you're like a fairly wealthy guy, and my opinion of fairly wealthy is going to be starting at maybe a $3 million net worth. if you're worth about $3 million, then worry about not buying houses in your name anymore and doing something interesting with like LLCs and like having like a tax attorney figure out like cool stuff for you. I think that the average military member that's going to own 1 or 2 or 3 rental properties just doesn't need to mess around with it. They can buy it in their name and they can get an umbrella policy for like extra liability that would be above and beyond the liability that a standard fire policy or renters, or a landlord policy has. That's my answer to the LLC question.
So, Rich, it sounds like you just, with the LLC, just adding cost and complexity for not much gain. If you're just a two-door kind of property
I get a
manager.
bunch of weird like tax things each year. Like, like even though it's a single member LLC. Both of them are. I'm the only person on it, which allows me to file it on our tax return without filing like a separate tax return. But I still got like a bunch of extra fees and paperwork for each LLC. And there's still like requirements, for each state. And I think maybe in California or in other certain states, those can be like really expensive, like the fees you pay for LLCs. So you're going to pay those fees for sure. Whether or not it's going to protect you from a frivolous lawsuit, like that's probably a very, very, very small chance that it would. Like that would happen. I mean, it could happen, but it's just a very small chance that your life's going to be saved because you had 20 of your properties in 20 separate LLCs.
Right.
Which would mean you'd have to have 20 different checking accounts, 20 different business credit cards, and have 20 sets of QuickBooks that would all have a separate fee.
Wow.
Yeah, sounds brutal. So, Rich, when you were managing or when you owned the rental properties and you were overseas...
I'm not a lawyer, nor do I play one on TV. For entertainment purposes only. Sorry, my lawyer just said I had to say that.
That's a good lawyer. But when you were managing these properties or owning these properties from overseas and you had a property manager looking after them for you, how did you go about finding that property manager? Did you get lucky on the first one? Or did you reach out for referrals? And do you have any advice or process that, if someone is going to buy a property in, let's say, Altus, Oklahoma, and then move to Hawaii, how can they go about finding a property manager?
Yeah. Well, I recommend investing in Altus and then moving to Hawaii. I don't recommend investing in Hawaii and then moving to Altus. That's just my 2 cents. So finding a property manager, in my case, I had some experience with property managers by the time I got to Montgomery, Alabama, because I'd used property managers on other properties in the past, and I'd fired property managers in the past. So I had learned lessons about property managers by 2013 once I was in Montgomery, Alabama. But in that particular case, I ended up being referred to a property manager. So I was here going to Air Command and Staff College, kind of like, War College, right, for whatever service you're in. But I was here in Montgomery, Alabama for 10 months. And somebody turned me on to this idea of investing in real estate here. Another military member who already had, I think, 4 properties. He also turned me on to his property manager and like some of his contractors and his real estate agent. And I ran with all that. I ran with that like ready-made model. And that was the property manager that I ended up using for like 4 or 5 years. But that doesn't mean that they were awesome from the get-go. We had a lot of back and forth all the time about like, hey, wait, no, like I don't like it when you guys do this. I'd like you to do it this way. We had communication problems. I didn't like the way that their reports weren't detailed enough. They were calling me too much. They weren't calling me enough. Like lots of things happen that you have to fine tune over time. But as long as they're able to take your feedback and make adjustments, and the most important thing, as long as they're trustworthy and responsive, then that can all work out. Another thing I'll offer though, how to find a good property manager. So and this can be whether you're looking in a location that isn't even where you live now, or maybe it is where you live now, but you're going to move soon. The big trick to picking a good property manager, I think, is asking them for referrals. And what I mean by referrals is asking to speak to other investors that are using them. Will you let us speak to other people who are investing with you? People that have whatever, 5 homes, 10 homes, 20, 30 homes with them. Talk to those investors. And then once you're talking to those investors, you take it further. Does that investor know anybody else who's using that property manager? So then you've even talked to another person. I also like to ask them if I can talk to some of their tenants. Or maybe I'll just try to find some way to call those tenants myself. Another thing that I'll do is I like to see how easy they are to get a hold of. So I'll sort of pose as a renter and I'll call the number. Does somebody answer the phone? Do I have to leave a message? If I leave a message, does anyone ever call me back? Do they call me back right away? So these are just some of the ideas. I mean, I have something on my YouTube channel. I know I've written a blog post about this, and lots of other people have too. But those are some of the top tips, I think, to pick a good property management company.
Yeah, those are great. Just real good tactical, and do a little bit of legwork and save yourself a lot of hassle further down the line. So, Rich, do you have any suggested reading or books for those who want to get into real estate investing? I know on your website you've said you've read quite a few. What are your top couple books that you recommend to that military officer or that NCO who's ready to start real estate investing?
I don't have any to recommend because I still haven't written my book yet. So, I've never fell in love with one, and I've never had a good recommendation for anybody. I think that Brandon Turner's books on Bigger Pockets, right? He has a bunch. And I think that his first couple of books, Real Estate Investing for Beginners, he just got the first couple of books that he wrote, they're really good books. Even more so than that, I like his book on property management. I believe he wrote it with his wife, and it's a really, really good book about property management. I don't say Rich Dad, Poor Dad, like everybody else does. I don't think there's necessarily a book out there that just nails it. I know a lot of people will read a lot of books and go on YouTube and get on blogs and start going to real estate investing groups. Those are all things you should do. But what you have to do is you kind of have to jump in and actually do it. So when I started investing, when I started buying properties, I hadn't read these books yet or these blogs, and I learned fast. You learn fast, you make mistakes. I think the important thing about getting started, I don't think it's about reading the right book or having the right recommendation. The important thing about getting started is having a mentor that is 2 or 3 years ahead of you in your journey. You do not need me to be your mentor. You don't need to pay a guru to be your mentor. Pay a guru $20,000 to be your mentor. These are bad ideas. You need somebody that is 2 or 3 years ahead of you in your journey. If you have 0 houses, you want somebody that's got 3 or 4 houses under their belt to kind of walk you through things. And that doesn't mind looking at your offer, or doesn't mind looking at your numbers when you're estimating, how much you're going to make on a property. I think that's important. And a mentor is a tricky word. You don't walk up to people and say, "Will you be my mentor?" That's a really weird thing to do, especially if you first met them. It's kind of like saying, you go on a date and you're like, "Will you marry me?" On the first date. It's just kind of weird. So a mentor relationship with somebody happens naturally. You just kind of ask them on their opinion, ask them for help. And then hopefully you find some way to add value to their lives. Hey, do you need someone to go I don't know, make some phone calls for you? Or do you need someone to you find some way to help that person? Certainly offering to buy that person coffee and pick their brain, buy them lunch and pick their brain is a good way to start. But find a mentor and do it in a natural way, I think is my advice. More so than having the right book to read.
Excellent advice. I think I agree with all that. So Rich, where can people learn more about what you're up to right now? If you want to mention website, Instagram, YouTube, what are you doing, and where can people find you?
I've got a website, richonmoney.com. It's not kind of the main thing I'm working on, but that's kind of, that's everybody has to have a website, right? and then YouTube, right? You can just do youtube.com/richonmoney, you'll pull up my channel, and I talk about TSP, real estate, property management. Those are pretty much the things I talk about, investing in general. And I'm passionate about it. I'm making videos, and people can ask questions, and I enjoy it. So that's the best place to find me.
Awesome. Well, Rich, thanks so much for coming on the podcast. We really appreciated you sharing all of your hard-earned advice on real estate investing, using the VA loan, and building a little mini real estate. I guess it's not even mini. It's a straight real estate empire while you're on active duty. So thanks so much for coming on the podcast.
Hey, thanks so much. Had a blast. Looking forward to be back on someday.
Thanks, Rich. It's been a really great episode with you, Rich. Thanks again for coming on. We got into VA loans and real estate investment, and I have 3 main discussions that I want to make sure the listeners remember as we wrap up today's episode. So to recap, VA loan may be a good option for your primary home that you can then turn into a rental property when you PCS. Number 2, don't forget the 1% and the 50% rules that Rich talks about on his YouTube channel. If you forget about those, you have to account for expenses, because having rental properties is more than just mortgage minus rent equals cash flow. There's a lot of other considerations to watch out for. And then 3rd main thing to recap is how you can set yourself up to be financially ready and to put yourself in a position where you can get into real estate.
Thanks again, listeners, for joining us today. We appreciate your continued support and for giving us those delicious 5-star reviews on Spotify and Apple Podcasts. For those of you who recently purchased my book, thank you so much. The book is launching on Amazon, Kindle, and Audible very soon, so look for it there. Hardcover, ebook, and audiobook. Military Money Manual, A Practical Guide to Financial Freedom by Spencer Reese. Just searching Military Money Manual should bring it right up on Amazon, Kindle, and Audible. Big thanks to Rich Carey from richonmoney.com and youtube.com/richonmoney for coming on today, sharing his expertise with the VA loan process and real estate investing while you're on active duty military. Amazing story there, accumulating 30 rental properties by the time he retired. So go follow Rich on YouTube or richonmoney.com. And he's also on TikTok. So check him out there as well. We'll see you next week on the Military Money Manual podcast. Hey guys, it's Spencer again. Before I let you go, I want to let you know about my new book. It's called The Military Money Manual, A Practical Guide to Financial Freedom. And it's available right now at militarymoneymanual.com/book. This is the book I wish someone had handed me on my first day in the military. In this book, I cover the exact money tactics, investing strategies I use on my path to financial independence before age 40. I break down the math of FI and I explain the exact dollar amounts you need to retire. The book is full of easy-to-apply financial advice specifically for military service members and their families. I cover tax-free deployments, the thrift savings plan, and many more topics only military personnel can relate to. This book was written specifically for you, whether you're active duty, guard, reserve, a military spouse, enlisted, or officer. Both E's and O's will benefit from the lessons in the Military Money Manual. If you're in the Army, Navy, or Air Force ROTC, or if you're a cadet or midshipman at West Point, Naval Academy, and the Air Force Academy, this is the perfect book to start your military career with. Again, the book is available right now at militarymoneymanual.com/book, an audiobook, ebook, and my personal favorite, the hardcover book. The hardcover book was printed right here at home in the United States of America, and it will look great on your bookshelf. So check it out. Let me know what you think. And remember, podcast listeners can use promo code PODCAST to get a special discount. It's called The Military Money Manual, A Practical Guide to Financial Freedom, and it's available right now at militarymoneymanual.com/book. Thanks for listening.